Arvind Sanger joining in this morning. We're also speaking with Radhika Rao, Senior Economist and Executive Director, DBS Bank. Arvind Sanger is Managing Partner, Geosphere Capital. Welcome to both of you and thank you so much. Mr. Sanger, I'm going to quickly start with your take on the latest threats on secondary tariffs on countries that import from Russia. Obviously, that would hit India as well if that was to go through. How real is that threat in your view?
My belief is that the market was expecting something more severe. And every time it comes to Russia, President Trump seems to lose his nerve in terms of threatening and doing anything. So I think the market is rightly looking through these threats and assuming that this is more President Trump trying to stop Congress, which was proposing a bill which I think has 87 supporters in the Senate, to put 500% secondary tariffs. And so this is Trump's way to dissuade Congress while he tries to get something done. So I wouldn't be holding my breath on anything meaningful coming out of this administration, meaningfully holding President Putin or Russia to account for anything.
Hi, Arvind, very good morning to you. I'm just wondering, in this context, and a lot of people seem to be looking through these tariff announcements, clearly there's no impact on asset prices globally. Crude has stayed pat. And so the question really is, how do you invest in this scenario from the global standpoint, looking in particularly at India? And because of late, we've seen a little bit of selling by foreign institutions on a net basis in risk assets. Does that come back? Does that turn around at some point, in your opinion?
I think we have to separate the question that I was just asked about the Russian tariffs with the broader tariffs, whether it's the EU tariffs or the Japan tariffs or the Korea tariffs or potentially whatever deal gets done with India, the deal that got done with Vietnam. It sounds like Trump agreed to a deal and then raised the tariffs. So I think the tariff uncertainty has gotten a pass for the last 2-3 months. My suspicion is that this could be the month where people start to worry that the eventual tariffs, whatever they are, will be higher than the benign case that the market has been assuming. And if that's the case, then the markets which are priced for pretty much a hunky-dory economic environment could see some top profit taking, because the private markets are priced as if nothing is ever going to upset the apple cart of economic growth. And the risk is these tariffs could have some impact.
Radhika joins in this conversation as well. And remember, while India CPI data has come out cool, today is also the other important economic data from the US and from China, arguably. But Radhika, can I weave in this conversation around what we've seen in India in terms of rates? I know what's happening in Japan is quite stunning, but what's happening in India in terms of CPI, and therefore, if indeed the inflation numbers, to your mind, are going to stay low, is there a rate cut or an interest rate implication to this data as well?
Hi, good morning. Certainly, I think the June CPI inflation that came out was in line with our expectation. We were expecting about 2.1%. In fact, the high-frequency data is now tracking July's number to be sub 2%, anywhere in the range of 1.5 to 1.7. So we are looking at a few more weak inflation numbers out of India. That certainly opens the door again, I think, for the central bank to go ahead and cut more. But I think the August policy review is going to be about a bit of clarity. June meeting did stoke a fair amount of confusion or a debate in terms of where the policy was headed. Whether we had seen the end of rate cuts, the stance was changed to neutral, and thereafter we have seen liquidity also being absorbed in bits and parts. So I would think the MPC as well as the governor would take the August policy review to provide some clarity that they remain on a dovish path, that they would consider more rate cuts. We have around 50 basis point more of rate cuts left in this cycle, according to our baseline expectation. Going to your question on the rates, certainly when you see the bond markets, they kind of reflect where the debate is, are there any more carrots dangling in terms of room for bonds to gain here on, especially the Indian bonds. Certainly Indian bond market action has been kind of I would say deviated from where the global bonds were, at least this first half of 2025, we had seen bond yields, Indian bond yields actually, decline, while rest of the world you had seen it actually rise. So it's very much domestic catalysts, I think, are going to drive. So if the bond markets now begin to factor in more policy easing, I think that's good news for the bond markets. Of course, in the meantime, we're also keeping an eye on what liquidity, action has been, especially if there are any more VRRRs that the central bank would announce.
Radhika, I'm just wondering, this food inflation print, though, is that cause for concern only because the implication would be that those that are selling these food products are not deriving as much as they did last year, or at least the incomes won't be rising as much. At least that is my interpretation. Please tell me from an economist lens how to interpret that. And so from that perspective, rural might be soft, and that is cause to cut rates and bolster economic growth.
Yeah, certainly. I think what you have seen is a two-way momentum in the food basket. If you see the perishables, those are predominantly vegetables. On sequential basis, they are ticking higher. But I think the scale of increase is not as much as it was last year. And last year, we should remember that weather-wise as well, there were heat waves that were there for longer, and thereafter we had seen rainfall catch up. This year is a bit different, and in fact, you can see that even in the power demand, right? Temperatures are not as hot, so power demand has actually come off. It's not been as strong, not as many air conditions are being used, for instance. So the weather patterns are having a difference in the food basket, the performance of the food basket. So perishables going up, but if you see cereals, pulses, they have kind of moderated. Protein sources, meats, fish, that has gone up. So suddenly, it's a very mixed basket, so to speak, but the heavyweights have been rising at a very slow pace and are down mostly year-on-year basis. But coming to your question, certainly, I think we track something called the rural terms of trade, where we try and equate the food versus the non-food. If you're making less returns on food and you're spending more on non-food, that certainly bodes poorly for purchasing power. Now, we haven't seen that index, I would say very weak as of now, but we are tracking that closely because incomes getting impacted will hurt purchasing power, and rural demand at this instance is certainly the brighter of the consumption stories as compared to especially the urban part of demand. But certainly something to keep a close eye on. And if it's purely driven by perishables, then I think it'll be very seasonal. But if it's just the food basket as a whole, I think that is something to be concerned about. Just a final word on inflation. I think if you core has been above 4%, but if you see core, which is removing food, fuel, and precious metals, that's also been pretty benign in the about 3% handle.
Okay, so that's good from a broader view, as Radhika is saying. But, as we wrap up this conversation, Arvind, just want to get your view on how you are looking at emerging markets, including India right now, because there isn't much excitement coming in from global investors. It's been fairly tepid here as well. Do you see this changing once there's some clarity on tariffs?
I think tariffs would certainly help. But I think we're just in the beginning of the earnings season for the June quarter. And I think it's important to see what some of the numbers are showing, because of some of the high frequency data. Electricity demand is obviously affected by early monsoon, but when we look at four-wheelers, two-wheelers, and other metrics of demand, things are not looking particularly robust. So it's going to be interesting to see what parts of the economy are showing strength, what parts of the economy are showing weakness, because at the end of the day, we're buying India or any other emerging market for the growth outlook. And I think that's going to be the key determinant, in my opinion, of going forward. But tariffs as a backdrop would certainly be important in terms of providing clarity of whether we have to worry about global growth and emerging markets growth if the US is going to be somewhat irrational on tariffs.
A point well made. Arvind, Radhika, thanks so much for joining us this morning. Pleasure speaking with you as always.